Greetings, my fellow warriors of Fannie Mae and Freddie Mac. Okay, so we have like some kind of developments these days, but first, let's start with this. You all remember when before the war with Iran started, that Bill Ackman went to the White House after exiting the White House. He said, Iran, then F2. And you remember that. I remember that. Okay, good. So obviously, finally, I think that war with Iran stopped and the oil start to move through the Hormuz. In case that we take a look at the map of the traffic map for the uh, of the ship trafficking, this is how it looks. It looks better than before. Before the here was almost empty. There was no ships, and now you can see, look how many ships here. So that means that oil and traffic is moving through the Hormuz, and that means the war is done. It's not the words; it's how many ships pass the Hormuz, and they're passing. So that is good, and that is finally settled. So next one will be Fannie Mae and Freddie Mac. On top of that, yesterday Pulte said that he still he still pay attention to Fannie Mae and Freddie Mac, and he mentioned in his tweet that it is all good. In the meantime, what happened is Cassandra Unchained. It's Michael J. Bury, the guy who was the Big Short from the movie, and he asked Bury like about asked Pulte what will happen with senior preferred shares. So that is the big question. Senior, it is like a really big question for us as a shareholders. And I would like to give you like a couple of ideas what I think and what is going on. And so we all know that senior preferred shares, like they're paid off. It's literally we gave the money. The treasury didn't account that money, just put on the account and didn't even announce. They accept the payment. They didn't announce is that for the dividends or is it anything. During the network sweep officially that was supposed to go just over dividend and payment over the dividend, and the court shut that down. So we actually overpaid the we overpaid the dividend, and by some logic that overpayment of the dividend should go toward the toward the senior preferred shares themselves. But that was never announced, that was never accepted. So basically, we just overpaid them. And they said thank you. They didn't even say thank you. That is the deal. And here is post by, and it says how much we paid and how much other like other companies, but government paid, and how much we overpaid. So we are supposed to government invested in Fannie and Freddie together 200 billion. We overpaid extra 110 billion and returned the money, and we've paid compared to the other companies 57%. Other companies paid like 12 or 21. This is negative. So we overpaid in any case the money borrowed. uh, the reality is that they didn't return this money to these companies. They will probably not to us. And what will happen is the question. There is a couple of insinuations what can happen with the senior preferred shares. First, that they stay on the books and that we continue paying the dividends on them. Even now, we don't. The other one is that it is like very unpopular thing that they can be converted to equity, and there is also an option that they can be converted to long-term debt. But we overpaid $100 billion. Like the question is, isn't that enough? Like, we paid what we are supposed to pay, we get you back money, we we are supposed to be good. If we took borrow the money from Al Capone, we would have better deal. And But what can happen, and what is, like as I said, like, we have a couple of options. First, that they are redeemed paid because we overpaid them. Second, that what is very unpopular, most probably will not happen, is that they're converted to equity, and then the government would increase the number of shares, and but that is most probably will not happen. If nothing else, it will decrease their value in the warrants on one side. It will be against the shareholders who hold this stock for 17 years, but that is not always concern of the and will they get the money? Yes, but not so much. They would get more money from the from if they execute only warrants. But in case that they do want the money, there is option that they take and convert that to long-term debt. Just to say, okay, this is not the senior preferred shares, it's debt, you can pay us eventually. We will give you some fair interest rate of, let's say, 5, 6, 7%, because you paid a lot. So it's nowhere, but that is an option. But I think that that would be the worst reasonable solution. But the best reasonable solution would be, like, you overpaid it, you overpaid like $30 billion, and thank you, we'll redeem them paid. But in case that they want the money, as they very often do, this is also another option, but I don't think they will do it. And so that is about senior preferred shares and what can happen overall. For all scenarios for us, it is not bad, regarding the stock price. In case that they are written off, that is like huge boost for the company, and we know that, okay, this is the value of the company, this is how much what we can expect, this is the price of the share we can calculate. And that is the best case scenario. The worst case scenario is that it's I don't think it will happen. Nobody thinks, but that it is lurking there, that they're converted to equity, what is like highly improbable, because let me repeat again and again and again that senior preferred shares are non-convertible, so they cannot convert them. It is like a big problem if they convert them. We can sue them, and the sue will be like 10 years, and eventually they will nothing will happen. But the whole idea is that they're not supposed to do that, and they're like they will not do it, like, because we pay that, period. So it's not need. And in worst case, if they really want the money, the easiest money would be, with that long-term debt, to convert it to long-term debt, and we are like, okay, you can go now, but you still own us 200. uh that is possibility. And so in any case, the value of the share can be like I said, like uh, substantially higher than it is now. The government want their warrants to be uh, valuable. Like right now, if the company is worth, let's say, a trillion, and they have 80% of the warrants, that means that they own 800 billion. And so that should be it. Like, do they want to, if they take and screw the investors, like, it is the market remembers, like, so it is the question what will happen. But no matter what, we are good. Why and what is going on also in the future, and what is the when everything will happen. The Silver Legal 1126 said this: DTCC account is ready, and That is the account that is needed for New York Stock Exchange to trade the securities. And the 21st Century Road to Housing will be ready in 2 weeks. That is around July 4th. Court decision around July 15th. But court decision is needed for IPO, it's not needed for uplist. So basically, they can release us on July 4th, and the court for IPO or SPO to be in case that we want to do something, and is July 15th. And FNMA and FMCC are now trading on Robinhood. Yes, that is very important because we are the only over the counter US stock trading on Robinhood, and that means something. And had ranked New York Stock Bell chain while FHA was busy on DNA. Yes, so had did ring New York Stock Bell, and it is like conspiracy that was planned for Fannie Mae and Freddie Mac, but they paid already and they were supposed to ring, but it didn't happen. So the HUD at least let's we have paid, let somebody goes and ring, and it was HUD, but it doesn't matter. The holiday is that means that housing is on the agenda for the uh, for the for Fannie Mae and Freddie Mac. Uh, Also, here this is the DTCC report, and as said, like you can see it, and um, this is very important. Okay, it was filed on April 4th, 2020, last year. So that means since then we are ready to go, and everything is ready for uplist. It's not like so everything, even like New York Stock Exchange is ready to accept us. But there is a drag. I believe that at that point of time they wanted and they thought that they can, like execute the warrants very easy, but it didn't went by the plan. So overall, uh, I think that July 4th might be the day that something happens because it's Freedom Day, and it is happening. And regarding the SPS, we'll see which one of those three outcomes will happen. Like I, I prefer, and I think my deep conviction is that it will be written off because it's paid off and just needs to be announced. That is number one. Number Option number two is that they convert that to a long-term debt in case that they really are desperate for the money, and to say that they don't want to leave anything on the table, they want to pick up all the crumbs. Like they will say, okay, you still own us 200 billion. Just to be fair, interest rate is 5%, so you can pay that eventually. That's like 10 billion per year to pay off. And it will be a problem that case scenario for Fannie Mae and Freddie Mac because it's a long debt, it's large debt. Like they need to pay like 10 to 20 billion dollars, $10 billion just for interest. And but that will be good scenario, like to convert SPS to long-term debt. Uh, and would that affect the value of the company? Not too much. How many companies have 200 billion debt and nothing? We would pay it would affect the company, but not too much. We'll still have good price per share. And third option, which is the least likely, and can be, we can push them on the court. They say that that SPS are not paid and that they convert it to equity. Even why we can push them on the court and we can won because those senior preferred shares are non-convertible. So they cannot convert it. They cannot convert it to equity. But maybe they can make a deal that it goes to long-term debt, or at least, it can take and say, okay, like, we have 100,000 and this and that and some kind of magic math that you still own us $50 billion, and that is long-term debt. They would satisfy everybody with that, and we would say we don't like it, but okay. We'll sue you, but like, eh, like, okay, if you're attorney, yeah, we will sue you, and we'll get nothing under 20 years. But if you're practical investors, like, if the government take that even that, like, it can be like accepted for our stand. What does it mean all for stock price? Basically, it is good. Like, all scenarios are good. And the question with senior preferred shares, have in mind the biggest deal, they're non-convertible to equity. So we're good. It depends, just do we have like a little bit extra depth or we don't. So that's it. Stay well, my friends. Stay healthy, and soon it is coming.